Hello and welcome to our Minds and Money 5 at 5 show, which this week is sponsored by Cabral Gold and White Gold and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. To make the session as interactive as possible, please have your video switched on. To ask a question, you have a couple of options. You can first of all go and submit the question via the chat function. So you'll see in the chat function at the bottom, and you see in the chat function at the bottom of the screen, I've gone and put in a hello and welcome message. You can also go and wave your hands virtually in the invite participants button. I can go and unmute you, and you can go and ask your question live. Today's show is gold themed, and to discuss this and discuss the mining and investment potential of gold, we've got a great lineup of guests. They are Alan Carter, who's President and CEO of Cabral Gold, David Donoforio, President and CEO of White Gold, Lawrence Roulston, Managing Director of Westbay Capital, and Stephen Soock, Research Metals and Mining of Stifel GMP. So to kick off, let's start with a polling question. And there should be a polling question which is coming up on your sort of screen now. This year has seen a bit of a roller coaster ride with regards to the price of gold. I think it was $1,944 per ounce at the start of 2021, then falling to $1,700 per ounce a couple of months later. And I think I was talking to Stephen just before the start of today's show, it's now up to $1,892 per ounce. So really interested in your thoughts as to where is the price of gold heading this year. Just while you're voting on that, perhaps I can just start by going to Stephen first. How do you explain the performance of the gold price this year?
Yeah, I would explain it, characterize it as a tug of war, really, between the sub-zero real rates we see specifically in the US, but also around the world, and reopening optimism for the global economy. Kind of through the first quarter, we saw these rising real rates and reopening optimism were really the key drivers as kind of, vaccine milestones were hit. We saw some kind of better than expected economic activity data. So on the back of that, we saw the US 10-year real yield jump from minus 1.1 to minus 0.6, still in negative territory. Quite quickly in late February, and that obviously dragged on the gold prices. There were alternative safe haven assets. Kind of more recently, though, we've seen those real rates retreat a bit more, and the decline in the U.S. dollar helping boost gold. Over the last few months, there's kind of been a bit of a 1-2 punch. The focus has shifted, I think, to the amount of stimulus dollars printed over the past year in the U.S., but again, also across the developed world. And then that recent inflation print in the States of 4.2%, way above expectations and far above the Fed's 2% target, kind of driving the point home. So, I think that's going to be kind of the focus going forward, and really see those as the key drivers up until this point in the year.
Okay, and then just bringing in Lawrence from Westbay. As an investor, which parts of the gold sector are you specifically looking at the moment?
Well, I'm looking right across the spectrum of gold investments. My background really is in the exploration development area. There's also some very interesting production stories, and I love royalties. Royalties provide a low-risk way to gain exposure to the gold market. So there's a range of different ways to play it, but to be very clear, and I said this all the way through while I was doing the newsletter, is I'm not investing as a speculation on the metal price, whether it's gold or any of the other metals, but looking at it from the perspective of, does the company that I'm looking at have a business plan that will add value regardless of the metal prices? And as we get increases in the metal prices, that should be a bonus on what is already a good investment thesis. So there's different ways to play it, but certainly it's worth getting exposure in one form or another. Just be very clear on, what your objective is in making that investment.
Mm-hmm. So you can mention obviously like the royalty and streaming companies particularly have kind of caught your eye. What about at the more junior end, Lawrence?
Well, companies that have opportunities for making discoveries can add enormous value. We've seen even with gold prices moving sideways or down, companies that make important discoveries are rewarded by investors, and that's not going to change. So there's an enormous need for new gold deposits right through the industry. The major mining companies are depleting their resources at at a steady rate. And it's been years, really, since the industry has found as many ounces as have been pulled out of the ground. So year by year, it's getting more and more important for the exploration companies to come up with the discoveries and advance those discoveries through development to provide the opportunity for the gold mining industry to continue to keep mining going forward.
Mm-hmm. Stephen, are there any particularly recent gold news stories that have caught your eye?
Yeah, actually, general gold news. I've really been digging into the Bitcoin versus gold debate, and the opinions vary widely on kind of what each is or isn't or should be. But I've really seen kind of a lack of quantitative analysis to back it up. But I think it's an interesting dynamic. Trying to look at the fund flows between gold and Bitcoin. And a year ago, I would have rejected that premise completely, but especially with Bitcoin having more, call it institutionally friendly framework and infrastructure around it. I do think that, they're kind of regarded as a pair of alternative asset classes outside your traditional stocks and bonds and outside kind of the fiat systems in each in their own way. So I think, that I find that really interesting, and I don't think Bitcoin's going to replace gold, but I don't think it's going anywhere either. I think they both have their place, and trying to understand that dynamic, I think is going to be important, if not answer the question of what each is and isn't and should be. So that's certainly one. Another one, I guess, more company specific was Fortuna Mining buying Roxgold. It's kind of an interesting foray of a major silver producer explicitly into the gold space. A lot of people don't realize that over the past 10 years, most of this senior silver producers are actually become significant gold producers. But this acquisition just made it a little more blatant. And well, I think the market didn't fully like the transaction. I would say it does show that these major producers are willing to step outside their comfort zones a little bit to acquire high quality growth assets. And that kind of the presence of silver producers in the gold space also kind of opens another door for potential for smaller companies to be acquired kind of by a different slate of companies. So I thought that was really interesting and could be a precursor of kind of more to come in terms of M&A action through the rest of the year.
Mm-hmm. Lawrence, what's your view on Bitcoin? Are you an investor?
Absolutely not. And not that I'm fundamentally opposed to it. It's just that my background and understanding is within the mining sector. So most of my investments are in the mining sector. I like gold over Bitcoin in that I see it as something tangible and real. There's a lot of debate about what it takes to create new Bitcoins and the energy issues and all that kind of thing. But let's not forget that creating a new ounce of gold is also has constraints and there's a lot of limitations there. So just on a personal level, I like gold as a tangible, real asset with a constraint on its supply and demand fundamentals.
Mm-hmm. Going back to the polling question, I think I've just brought the polling question up. The most popular answer was the price of gold will be heading to $2,000 to $2,100 per ounce. Just quite keen to bring in our other panelists as well. Alan, I know we're going to be hearing from you shortly, but where do you think the price of gold will be heading this year?
Yeah, I think it's going up, Andrew. I think most people in our industry believe that the fundamental drivers suggest that the price should now start to move up. And added to that, you've got the seasonal effect. If you look at historically at annual price graphs for gold, normally there's an upswing around about this time of year, June, July. In fact, there has been the last few years, but fundamentally, there's a huge amount of currency debasement going on too here. So I think those factors added to what Lawrence was talking about, the supply-demand gap, that there is a crunch coming in terms of supply-demand, and what Stephen was saying earlier about inflation rates, in the US dollar is augurs well for gold going up.
Mm-hmm. And David from White Gold?
Yeah, I'm fully on the same page as everyone here. I think the backdrop, it's checking all the boxes for what would be a historical driver of the gold price. The US dollar probably being one of the ones that I see to have the most near-term impact on the price. So my vote was also in that most popular category there as well. So
sure.
Very interesting time to be in the gold industry, especially when you sort of compound some of the other points that the guys brought up, from the junior sectors. We've had this deficiency of exploration expenditure in the last decade plus. These major mining companies have a pipeline of production that is needing to be backfilled with new projects. There has not been, very many new sort of world-class type discoveries in that time, and the pool of candidates is gotten a lot smaller. So I think the interest level is grown significantly. And part of what makes the junior mining sector so exciting, there's the discovery, what we talked about, and it's nice to see that companies are being rewarded for drill bit discoveries. That's been consistent now. And M&A is also the other driver of excitement and value. And I think for all the reasons we just discussed, there's a need for M&A. And with COVID in the last year and a half, the opportunity for a lot of these companies to get out there and do their due diligence was hampered significantly. So there's a little bit of a pent-up demand. So I think we could be seeing an acceleration in that regard as well, which is very exciting for guys in our industry for sure.
Okay, excellent. Well, I think that without sort of like further ado, let's move on to our first mining update of the show. We heard from him earlier, but Cabral Gold is a mineral exploration company with a focus on gold. Its key asset is the Kuyu Gold Project. Alan Carter is their president and CEO. So Alan, would you like to give us a bit of a update?
Sure, Andrew. Can we move to the next slide, please, since you've got control of the deck here? I think there's a few key fundamentals that probably most of us are looking for when we're contemplating an investment in a gold exploration company. First one I'd suggest is discovery history. We've been involved as a team in 5 gold discoveries in Brazil over the last 20 years. One of those is in production, 2 more are slated to go into production. We've put quite a lot of our own money into this. I've so far invested $1.7 million cash, so I'm aligned with my shareholder base, and I'm currently the largest shareholder because I've put a lot of money into this company, which obviously drives behavior. We've got a million ounces, 2 deposits currently containing 1 million ounces, a lot of upside to that. The project is district scale. It is a large area. We've got 43 targets outside those 2 deposits. A lot of high-grade mineralization within those 43 targets, 10 of which have high-grade drill intercepts on. And importantly, I think the other thing is a news flow. We've got a 25,000 meter drill program in progress with 3 rigs currently turning. Last year, we were ranked the number 2 performing mining stock on the TSX Venture Exchange, actually the number 1 performing gold stock on the TSX Venture. Next slide, please, Andrew. There's the discovery history. I'm not going to get into it. My background, I'm a geologist by training. I got a PhD in gold. I spent 13 years with majors, Rio Tinto, Billiton, BHP. You can see what I've invested there in the last 3 private placements. And I think the other aspect to the management side of it is you've got to know how to get a deal done and exit when the time is right. And so first company I co-founded after leaving BHP, we took it from $1 million market cap company. It was basically an idea on the back of a beer mat to an exit 6 years later when we sold it to Stillwater Mining for just under 500 million Canadian. That was a copper project, not a gold project. Next slide, please. This is just briefly the capital structure. We have about a 70 million market cap company. We've got institutional shareholder base here of about 40%, and a whole list of institutions here. Next slide, please, Andrew. Jurisdiction's important. We're in this part of Brazil in the north. The Tapajós region's the site of the world's largest ever gold rush. The other things about Brazil, which are really working in our favor right now, is that the Canadian dollar and the US dollar are trading close to a 10-year low against the Brazilian real. The Tapajós region is ranked #1 in terms of historic gold rushes. So in the 1980s, this was an amazing place to be. The other thing that's important to us is we have a 12-month field season here. Our project actually was the largest historic placer gold camp of that whole region. Next slide, please, Andrew. Neighbors are important. We have an important neighbor. Dorado Gold controls all the blocks in blue. We control the blocks in pink. The yellow spidery lines there are the placer gold streams that were mined for placer gold during the gold rush. Eldorado's project is now fully permitted. They've got 2.3 million ounces in a granitic rock underneath those stream beds. 200,000 ounces in their area was produced during the gold rush. In our area, there was 2 million ounces produced during the gold rush. So as order of magnitude more gold came out of our area during the gold rush. Next slide, please. Just a word on the existing resource. As I said, we've got 2 deposits. There's lots of upside to these. We've actually drilled a lot of high-grade drill intercepts that are not currently included in the resource, and the top cuts that we've got are very conservative. They range anywhere from 2 to 20 grams. Most of our deposit zones in our deposits are cut to 5 or 10 grams. Eldorado's deposit is cut to 25 grams. So there's a difference of 535,000 ounces between the drill results, the size of the 2 deposits that the drill results suggest, and the actual 43101 resource, which you've got to say is got to be conservative. Next slide, please. District scale, as I said, 43 targets outside the outside the two gold deposits. Very complicated slide. Magnetic background. All the yellow lines here are where there was gold mined from the streams. If you look at the distribution of where MG and Central are, you can see that 90+% of the gold that was mined in the streams is not being eroded from Central or MG. So this is a massive district. It really has world-class potential. The next slide, please, Andrew, which I think is the final one.
Yep.
So we've got drilling in progress. 3 rigs currently turning. We've just drilled last week. We drilled just 60 meters at 3.5 grams. It looks like we have a new deposit in a blanket, an oxide blanket, which sits on surface. It's up to 50 meters thick. We think that's a game changer. It's still open to the north and the south, but it's a very exciting development. It has all sorts of implications for us. So I think I'll leave it at that and open it up for questions.
Okay, thank you very much for that. I'm going to go and kick off an opening question of my own. On your website, you talk about your community support. Can you elaborate on this and your ESG strategy?
Yeah, there's a whole page on and a presentation actually on our ESG work. We have a village near us where we have which we base ourselves out of, about 600 people. So we're very it's very important for us as a company to improve the lives of the people in the community and leave a lasting legacy. So just to give you some examples of the things that we've done in the last 12 to 18 months. We have renovated the school, put in air conditioning, put a new roof on, bought a bunch of equipment for the kids. So we put in a new water supply for the village, drilled a borehole. We run the health clinic in the village, which has been particularly important because we track the evolution of the COVID pandemic in our community. We pick up the garbage. On the environmental side, most of our rigs, virtually almost all of our drilling has been done with very small man-portable rigs. So we're using existing roads. We're filling in trenches. We're very keen to. Those are just some of the things that we've done and we continue to do, Andrew.
Okay. Perhaps I can just bring in our investor guest. But obviously before that, just to reiterate, if you've got any questions, please don't hesitate to post them in the chat box at the bottom of the screen. Turning to yourself first, Lawrence, what questions do you have for Alan?
Alan, you've got such a wealth of targets there. how do you prioritize them, and what's your plan to work through this? Are you going to develop a lot of new deposits, or just demonstrate that this really is a district scale opportunity before you set yourself up for an offer that you can't refuse?
Yeah, we're going to systematically, and we've had a few offers, Lawrence, but we're systematically going to work through the targets that we've got and try and determine how many of those 43 other targets are actually hang together to make to form other deposits. I mean, we're very optimistic about this blanket. It looks very, very likely that it's going to be another deposit. And we've got another zone that we discovered reasonably recently called Mashishi too, which is only 500 meters north. So some of these other things are starting to come in. We are going to have quite a large percentage of our drill budget based on testing some of these other targets. I mean, we've got some spectacular areas with some incredibly high-grade boulders in some of the areas, some of the targets I haven't got time to talk about that are unexplained. So it's going to be quite an interesting 6 to 12 months going forward.
Okay. Stephen, what questions do you have for Alan?
So I've got, my first one here is, the mineralized oxide blanket at MG is obviously a big game changer for the economics of that deposit. But how does it change how you think about the larger region or the types of deposits kind of that you could be sitting on now in your land package, or kind of your general exploration approach to the broader area?
Excellent question, Stephen. So yeah, look, we've got a district scale opportunity here, guys. So this oxide blanket has resulted from erosion of a primary deposit, the MG deposit, which is underneath it. It's subvertically dipping, and it's been eroding over millions of years. And obviously the gold has gradually eroded out into the cover sequence, which is up to 50 meters thick. Now, we've got another deposit. There are very good indications from the drilling that's been done that we are very likely to have another blanket associated with that. And some of the other 43 targets here, obviously we've got a little bit of drilling on some of these things. There are very good indications of additional oxide blankets. So there will be a certain amount of money which will be diverted to actually exploring for these near surface or at surface oxide blankets. I mean, the other important implication of finding these things is obviously they have a much larger footprint. They're flat, shallow drilling down to 50 meters. The one at MG is at least 500 meters across. It's different to drilling for one of those is obviously different to drilling for a body which is vertical, subvertical, and is 50 meters wide. But having an oxide blanket, it really is a game changer. All that material was assumed to be sterile in the 2018 resource estimate, so there have been a significant cost to stripping all that material off. And obviously, this is free digging material: no crushing, no grinding, no drilling, no blasting. So yeah, I've described it as a game changer, and it is very significant development.
Okay. Just maybe like one last question for myself is that I know you talked about Tapajos obviously seeing the world's largest gold rush between 78 and 95. Hasn't all the good grade gold been mined and discovered there?
Well, virtually all the good placer deposits have been mined, Andrew, but placer deposits, for those of you who are not aware, placer deposits are basically gravels, river gravels, stream gravels, and all that gravel is obviously eroded material. What we're looking for is where all that material has come from. So yeah, most of the placer deposits have gone. Vast majority of that easy gold that, the 5 or 6 of us could, with probably $1,000 in our pocket, go down there with a pump and set up a sluice bucket, a sluice box, and start recovering a little bit of gold. But most of that's a finite resource. So the really, really massive opportunity in the Tapajos that sits before us is where all this gold is being eroded from. There's only 5 gold deposits been found here. During the gold rush days, the Brazilian government estimates there was 20 to 30 million ounces of placer gold. That's eroded gold. And Dave knows a thing or two about big gold rushes because he's sitting with a photo where there was a massive one 150 years ago or so. But this one was enormous in the Tapajos. It was 10 times larger than the California gold rush in terms of people. So 20, 30 million ounces of placer gold, there must be an awful lot of gold sitting in the granitic rocks in this region.
Okay, well, thank you for your answer to that, and actually gives a bit of a nice plug to our next speaker. Whilst I'm just briefly introducing the next speaker, I think his colleague Jerry's in the background. So Jerry, you just want to see if you are able to get your slides up. If not, we'll just revert to me just sharing the slide that was sent in beforehand. Oh, we have your slides up on screen. Absolutely perfect. Just a bit of a brief intro. White Gold Corp is the largest landholder in Yukon's White Gold district, owning over 40%. David Donaforio is president and CEO. Over to you, David.
Thanks, guys. Great to be here. Yeah, I was just sort of thinking a lot of similarities between our two companies, focused on these areas of such prolific amount of gold literally sitting on the surface. And, you know, now for the first time, we're both applying some modern day exploration to see, you know, what the extent of that gold is. And I think we've both sort of shown that there's definitely a lot more as you get deeper. And I know for our sake, for sure, and it sounds like Cabral as well, the more work you do, the more gold we're finding. And that's the way these systems usually work. When it's there, it's there. This area is in Canada's Yukon, which was the epicenter of the gold rush sort of in the late 1800s. And since that time, it's continued to be mined extensively for their placer golds, at least, having generated over 20 million ounces now. And it wasn't until only 15 years ago or so that people started to actually perform more modern day hard rock type exploration. And, you know, that's a real head scratcher, right? This is not, you know, some remote, maybe dangerous place in another country. You know, it's in Canada, where mining's been going on for hundreds of years, great legal framework. So why is it that this particular area, you know, which is a 3-hour flight from Vancouver, had not seen more work done? And the reason is that this area was actually never glaciated, unlike a lot of the parts of Canada and other parts of the world. And that prevented sort of typical prospecting methodologies from being useful. You know, generally you have outcrop, and that's what prospectors will key in on to look for sort of, you know, indication of mineralization, and with their rock hammers take their chips and go away. But without the without the glaciation, there's only about 2% of outcrop. So I think after, you know, the easy gold was found, and, you know, in the early days with the gold rush, and, you know, people sort of picking away at it currently, which is still being successful, and you see it on Discovery Network's TV shows. It's I think one of their best, and it's a very exciting place to be. The real type of exploration just didn't happen. Now, when that changed about 15 years ago was directly sort of the work of Sean Ryan. Sean Ryan is the founder of White Gold, along with ourselves at the Power One Capital Group. Power One, we're a merchant bank based in Toronto, and we've been very involved in the mining exploration industry for about 20 years now. And what we look for is very unique opportunities to partner with either projects or technical teams that can really sort of provide a very sort of significant reward if the theories are successful. We've been very fortunate over the years to have been able to partner with a number of people that have led to, you know, very high profile success stories. And when this project was brought to us by Sean Ryan, you know, it almost sounded a little bit too good to be true, but you know, we took the opportunity, and I'll get into little details of why, and sort of jumped in with both feet. That was kind of our conclusion, and glad that we did, because since the creation of this company in 2016, we've been able to execute as much as we were hoping to, and actually even more so. And so this is, you know, just to give a little bit more of the context. So it's a relatively new company building on 120 years of prolific sort of gold production history. But more so than that, what White Gold represents is basically the 40% of the district in terms of landmass, which is about 400,000 hectares, but really it's 80% of the targets that have had gold mineralization identified. And when this area really sort of came onto the map in terms of modern exploration was about 15 years ago, when Sean Ryan was drawn there from the Timmins camp, where he sort of cut his teeth, and you know, like Cabral said, you know, you got all this gold here on the surface, there's got to be some more. And what he did as a technique, because typical prospecting methodology didn't work, he keyed in on soil geochemistry as a very useful indicator of mineralization. And why that works here is, without the glaciation, the soils are representative of the bedrock because they've been in place for thousands and thousands of years. And he was able to key in on not necessarily just gold, but different geochemical signatures that would lead him to identify the mineralized systems. And from there, with the mineralized systems, he would then sequentially perform different and more advanced levels of exploration to lead to eventually diamond drilling, which, as we know, is the truth teller. And amazingly, he gets there in sort of 2007, 8, 9, working up his projects. As he has, interesting opportunities, he started optioning them off to a number of different junior companies. And almost right away, the first couple of companies that he was working with had major successes finding multi-million ounce gold discoveries. The first was Underworld Resources. This was immediately acquired by Kinross in 2010 for 140 million. Just down the sort of over the ridge was another company he optioned his package off to, Kaminak Resources. They had a major discovery on their coffee deposit. That was acquired by Goldcorp for 520 million in 2016. So with all this success happening, so quickly, that drew, a sort of a second gold rush, as it were, to the district, with junior exploration companies coming. When they get there, they find that Sean Ryan had, staked the majority of the best projects, and he ended up doing a bunch of different option agreements with these different companies. The ones that had the success were able to continue to be financed and advance the projects. Unfortunately, in 2013, 14, when the junior exploration market sort of wasn't as, didn't have the access to capital like it does now, the majority of these projects weren't able to maintain their work commitments that Sean Ryan had put in his option agreements. So Sean ended up getting back all of his original projects, except for the two that ended up being acquired by majors, but he got it back with the benefit of $25 million of work being done. He analyzed the data, he looked, he said, listen, I know what led to these first two discoveries. I see what I got here in the package. He was as confident, if not more than he was initially on the prospectivity, but going forward, so listen, I want to package this all together and I want to work with one group. That's when he came to Power One. We saw that and we said, Sean, you're telling me you have an entire district in a tier one country with this type of prolific history, absolutely we're in. And we believe that this is the kind of thing that the majors would jump all over. And with our relationship with these majors from, doing other transactions with them, we brought the opportunity to them. And not surprisingly, they were all very keen. And from that group, we were able to choose Agnico Eagle to be our strategic partner right from the get-go. So they came in and bought 20% of the company, and sort of we looked at a relationship where we would be their sort of their exploration arm for this district of Yukon. And we've been working the area since for the last 3 years and been very, successful and starting to make several new discoveries and really sort of prove this thesis that there's a lot of gold in this area. So, that's how it started. That's a big reason why we think this company is so unique. Another kind of value creation was generated immediately because when we started the company, is the only other major shareholder in the district was Kinross. They had just bought the Golden Saddle asset from Underworld. We went to talk to the guy. It says, when we have a great relationship with them as well. So listen, we're here. This is our plan. We're gonna, just test all these, 50 plus targets we have. Our guys are the guys that made your discovery. They think there's a lot of opportunity there. Why don't we merge our two projects together? Let us take the ball and run with it. We have the history, we have the skill set, we have the team in place. And then, that way you can sort of continue to work with us to unlock this district in Canada. And, and they were sort of very keen to do that. So what that all shook out to, and the way things stand now, is Kinross, Agnico own about 40% of the company. Power One and Sean Ryan, we own about, that percentage of the company. We have a couple other, very sort of astute institutional shareholders, Eric Sprott and a couple other people, and we have this vision of, we have a brand new camp. We think this could be like the Timmins camp. We think this could be like the Abitibi, Nevada. And and although we're a new company, we have the benefit of 100 years worth of data and seeing all this placer work, plus $15 million or 15 years of more recent modern day exploration, which has been sort of augmented with the work we've done in the last 3 years. We've had tremendous success. We've grown our deposit. And so from my perspective as a shareholder, I can't really dream of a better opportunity from a risk reward perspective. The Golden Saddle deposit, we've now grown that to about little over 1.5 million ounces. It's 2.25 grams. It's at surface. We have another little deposit to the north that Sean Ryan discovered. So in total, we're at about 1.8 million ounces. That's a phenomenal deposit, as to own in a company like a junior. And we're continuing to spend some time to sort of really identify a path to showing the significant upside potential of this deposit. But at the same time, we have this incredibly exciting pipeline of greenfield opportunities, which now after 3 years, we've shown to be incredibly productive from the work that we've been doing. So you really get the best of both worlds. And this is starting to draw interest. And obviously we have these great partners, but other different companies, as we talked about earlier, we need gold production companies need deposit, and the list of assets of this sort of size and great profile in this type of jurisdiction is not long anymore. So we're getting a lot of interest in those types of properties. And where we stand today, we're going to continue to advance our more significant assets and our more mature assets. At the same time as what we've been doing in the last couple of years is moving our other projects up our pipeline, from early stage soil sampling, follow this protocol that Sean Ryan developed called drones to drills, where he advances these projects through discovery to the resource sort of definition stage that's been so successful. We have the benefit of the previous success that's giving us the signatures of how we like to prioritize our projects based on the work that is done. And it's a sort of a great time to maybe get an introduction to this story with our work season kicking off in June. And this year we have a particularly exciting program lined up. A couple of our most highly anticipated projects are now on deck for first time ever diamond drilling. One of the big ones everyone's sort of been waiting for is our Betty property, which you see just to the south of our package. That ties on to Newmont's Coffee project. We had a discovery there 2 years ago, hitting 50 meters from surface over gram type material, looking kind of very similar to the Coffee. That's also contiguous to Western Copper and their massive deposit. As you saw, Rio Tinto came in to buy 8% of that company last week. So this area is on the map. It's elephant country. We're doing, it's still relatively virgin territory where targets are brand new targets are getting first time ever diamond drilling. And I think for gold exploration type investors, it's the perfect type of opportunity you want to be investing in. And then just to layer on to that, one last point of what makes, from our perspective, so attractive is the support of the government. They've been investing hundreds of millions of dollars to support the mining and exploration industry in the province or in the territory. Part of that is a road system they're building from Dawson down to the Coffee project, which comes right through our package, being the yellow you here see on the slide. So that just totally changes the economics and other fundamental dynamics for our land package. Now we can go and find any type of mineralized deposit along that system, road access, even if it's only 300,000 or 400,000 ounces. As the camp develops, once mills start getting built, you just truck it there like you see in these other more mature type camps. You don't need to necessarily go and find 1.5, 2 million ounce deposits like we did initially with our flagship deposit, but everything that you find is potentially economic.
Okay,
we
I think we need
very
to.
excited.
I think probably we're slowly overrunning a bit. So is it okay if I'm going to interject with a couple of questions from the audience, and then if we've got time, we can just go sort of back. There's a couple of interesting questions that have been sent in from the audience. One is just about how expensive is it to drill, and when is your drilling season?
So the drilling season starts in June. So we're going to get undergoing. There'll be a wholesome update to the market in the next few weeks, and we get the drill sort of right up until October on the diamond drilling. We also use rotary air blast drilling quite significantly, just because it is much less expensive and we can drill all year round. We choose not to drill sometimes, in the middle of the winter, just from a cost and safety perspective, but it is certainly possible. And that was something fundamental. We use that as a first step. to be able to limit the cost of our initial exploration drilling from diamond drilling, and only use diamond drilling once we've had success on the rotary air blast drilling.
Okay. Stephen, what questions do you have for David?
Yeah, you mentioned, you know, you've got 1.8 million ounces kind of global resource across the property. What do you see as kind of the critical mass to really start developing a project?
It's a great question. Yeah, it's a great question, and it's sort of like in the eye of the beholder type thing, right? You know, when you have a major company like Agnico Kinross, maybe that's, you know, they're thinking, you know, 2 million, 2.5 million ounces to sort of, you know, to start to take things to the next level. But then, you know, you have other companies where, you know, we get phone calls from mid-tiers where that's a perfect size for them to sort of put into their pipeline as a starter asset. And then, you know, recently we've been getting, you know, having interest from, say, these Australian groups where they look at that and say, guys, you have this 1.5 million ounce deposit, you know, the core is indicated 1 million ounces near 3 grams. Like, why is that not in production? If this is Australia, it would have been in production a decade ago. Like, so it's this type of a market's been phenomenal for us because it's really shown the value of that type of a deposit to a wide array of different groups.
Mm-hmm. Lawrence, what questions do you have for David?
David, you've got a wealth of opportunities there. What will be your balance between outlining resources on the known deposits versus demonstrating potential in other targets that you've only just begun to explore?
Yeah, that's a great question. Our fabric is exploration. We're not a development company. So, you know, ideally we'd like to see white gold as a project generator. You know, our skills, our success has been all in making new discoveries. And so that's where we think we can drive the most value. And I think as a junior resource company, you know, having been the largest shareholder here and involved in many others, you can really sort of build the most value, we think, by a new discovery. With that said, the work that we've done on our deposit, you know, so why are you bringing in an asset if you're supposed to be a project generator? We did that with the Golden Saddle just because our team felt that there was just so much low-hanging fruit there, having worked on it in the past, and we've shown that increasing the size by 50% in 3 years. But our continued work in that area is not necessarily going to be on sort of conserved delineation drilling. We're looking for new discovery potential within a close proximity to that. And you know, we were successful in doing that last year with our Ryan Surprise discovery 2 kilometers to the west, where we had, you know, 6 diamond holes with 10+ gram material in it, and that's on a huge mineralized trend. So we think we're onto you know, another productive part of the system. And being so close to our deposit, obviously that's the best place you want to start finding more ore.
And just to follow on to that, are you able then, and it sounds like maybe you're heading in that direction, to kind of carve off some of the more advanced deposits and have it, you know, them sold or taken over by larger companies while continuing to add value on the balance of your exploration targets?
Yeah, from a high level, that's exactly our business plan. Ideally, as you monetize these more advanced assets, you can use that capital to continue to fund your exploration and not have to continue to dilute your shareholders, right? In exploration, it's capital intensive, and managing dilution is, you know, a hugely important part of a company's responsibility to optimize the value for their shareholders. So that is exactly what the goal is. And, you know, now we're in that point where we have some assets that are at the stage of getting that type of interest where we can look at different opportunities in that regard.
Mm-hmm. And just like a question for myself, I think on one of your earlier slides, you talked about some of your key sort of major backers. I think one of them you mentioned was Eric Sprott. How did that come about, David?
We have a long relationship with Eric from the Power One Group. You know, done many different sort of worked on many different projects with him, and we presented to him sort of the company. And you know, he sort of sees the thesis. He's such a visionary, big thinker, and he got it. He was very sort of excited to get involved with being able to sort of unlock the potential value of this prolific district in Canada.
Mm-hmm. And just like a similar question for Alan at Cabral Gold, I think when you talked about your institutional shareholders earlier on, you had a couple of like big hitters. I think one of them was like US funds, and presumably that's I'm just going to, can you talk us a bit about who some of your major sort of backers are? Alan?
Yeah, sure. Well, Crest Cat Capital is quite a big one. Crest Cat, as you probably all know, was one of the top performing gold funds in the US, top 5, I think, last year. If you don't know Crest Cat, Google Crest Cat, guys. Crest Cat are a very, very good institutional shareholder. They're advised by Quinton Henning. Quinton Henning was the chief geologist for Newmont. He's a very, very good geologist. He's involved in a number of different companies, and he's a very, very good explorationist. So Quinton's actually been to site at the end of the gold rush for Newmont. And I think having Crest Cat involved in our company is very important. Some of the other institutional players, there's some of the household names in Canada, Cisco. The Cisco group, as we all know, phenomenal success in Quebec. And now they've split and morphed into several different companies, and so they are investors in our company. Royal Bank of Canada, their precious metals fund, they invest all throughout the spectrum. Successful gold fund. It's had amazing returns in the last 12 to 18 months. So yeah, I mean, we've got a very, very good institutional shareholder base, which I think if everybody who's listening to this call is it is one of the considerations when you contemplate an investment, because these institutions do their homework. They have a lot of them are advised by very smart people like Quinton Henning, and it should be one of your criteria when you look to invest in a junior company. The other ones being obviously management, and the project and the upside, district scale, et cetera, et cetera. Ability to raise capital, discovery history, exits, deals that have been done. But institutional shareholders kind of key.
Yeah, I mean,
actually, if I could,
sorry.
Oh, sorry, I was just going to say, kind of following on the key partners theme here. David, White Gold's got Agnico and Kinross. Are they kind of happy to be passive shareholders, or do they have more of a working relationship with you guys, get to tap their?
We have an amazing working relationship with them. That was, part of our decision-making process at the beginning when we chose Agnico, particularly as our partner to start. They sort of offered up their technical expertise and assistance for, to sort of execute on this project. And I really feel that they're actively involved. They come to site, senior people, 2-3 times a year, and they really sort of help lay a path towards success, and kind of are holding our hands to bring us down there. So they've been a phenomenal partner. They've even actually done some work on our behalf. Some very sophisticated technical interpretation type stuff where they have the lab and the resources. And, for a junior company to have access to that type of expertise is, unbelievable. Very, very happy with that.
Alan, would you ever consider exploration partnerships?
Yeah, we would, but it has to be on the right terms, Andrew. We've certainly been approached. I mean, we've had written offers in the past from larger companies, but most of those offers have been along the lines of a joint venture, i.e. an earning agreement where they fund your exploration for three years or so up to a certain level, and then they end up with a majority interest in the project. I mean, look, to be clear in our case, we clearly have a district here. This district could contain 10 to 20 million ounces. I'd be surprised if it isn't. And so, now for us is not the right time to do that kind of arrangement. We have only a 70 million market cap. So, for us, we need to continue making discoveries and demonstrating that we're well on that. I think we are demonstrating we're well on that trajectory to defining multiple deposits within our district that will all feed a central processing facility. But the partnership has to be the right structure. We'd certainly contemplate, a major company taking a 10% stake in our company, sure, but a joint venture type arrangement, no, it's not something that we think would deliver maximum value to our shareholders at the current time.
Mm-hmm. And just kind of a question for Lawrence and Stephen. Obviously, from both mining companies today, what's very attractive about them is good sort of backing, great management teams, good geology. But if there was particularly like one sort of aspect of sort of like both of the projects that sort of stands out, and you had to pick one out, what would it be and why? Perhaps I can go to you first, Lawrence.
Well, I think these companies are very similar in so many ways. the placer mining history in both cases has demonstrated that there's a lot of gold in the ground. These are clearly very, very large districts that have enormous potential. I'd have a hard time choosing between them. Both are good jurisdictions, and both have enormous upside potential. Now, David was very clear in outlining the opportunity to carve off deposits as individual deposits start to flesh out. I wonder if Alan would have the same approach. Clearly, Alan, you're not at a stage where you want to do an overall JV type arrangement, but would it make sense to carve off individual projects? I think that might be a consideration, although the logistics might work out as well.
Yes, it's definitely a consideration, Lawrence. Yeah, correct. I mean, as you said, it's district scale, so that is something that we might potentially contemplate in the future, absolutely. But not a sort of an earn-in leading to a joint venture on the whole district. I mean, that's but certain aspects or certain parts of it, sure. Yeah, absolutely.
And
okay, so on that basis, two very, very good companies.
And Stephen, what kind of aspects of both projects particularly caught your eye today?
Yeah, I think being able to define the path forward too. There's obviously the discovery potential at both is incredible, and lots of call it high quality sniffs right across these extensive land packages, both with some anchor, some kind of core anchor deposit. So I think that's really good. But being able to articulate kind of where you go from here, what the strategy is between developing these assets, these core deposits you already have your hands on, and your strategy to be able to advance all these earlier stage ones. And something that I don't think always gets appreciated is especially kind of with the amount of discovery potential for both these kind of companies, that there's the 4 or 5 targets you hear about, and then there's the 30 that they're working on quietly in the background that you might hear about next year, the year after, when they hit that stage. So it's really the as was mentioned before, management's high quality management's ability to keep that pipeline full and keep those exciting targets coming, and balancing that with advancing the core assets.
Excellent. Well, I think on that sort of positive note, that brings us to the end of today's 5 at 5. So all that remains for me to do is to thank today's guests, Lawrence Roulston, Stephen Soock, David Donaforio, and Alan Carter. Many thanks to you, our guests, the audience, also to our sponsors, White Gold, Cabral Gold, as well as the Resource Global Network. See you next week. Until then, stay safe. Thank you very much.